Hello and welcome to the World Copper Podcast. We are the three copper musketeers. Simon Hunt from Simon Hunt Strategic Services in Dubai. Juan Carlos Guajardo all the way over there in Chile from Plus Mining, and myself here in the land down under of Australia. This is episode 6. It's been a bit of a gap since we last spoke, but not a very long one, and a lot of things have happened in that short period of time. And here we are to try to get our heads around those, as we will do in this podcast and in future ones. I think the first question here really, is to both of you. It's been a roller coaster. We're a gnat's whisker off $13,000 a ton copper, and it's been somewhat higher than that for brief periods of time. Gold at 5K plus, silver at higher prices than we've seen in, at least nominally, in history. There's been a bit of a shakeout, and then it's bounced back again. Is the shakeout in the markets and the roller coaster that we're experiencing now telling us anything important, or is this just normal sort of variations in this very volatile world that we're living in? Obviously, parabolic curves don't last forever, but sometimes they last longer than we expect. Simon, maybe you address that one first.
Yeah, that's a very good question. It's key to what is going to happen to copper over the next, not only the short term, but the medium and long term. It is clear that the run-up in copper prices had absolutely little, if nothing, to do with the fundamentals. The industry has been operating in surpluses. The surplus was pretty large in last year, probably running even with China's consumption probably not growing by more than 2%, but the rest of the world, I've assumed, a strong 4%. Even so, we'll be running a surplus this year, despite lower production from certain parts of the world, but overall a surplus. So it's really, and you talk to anybody in the industry, they'll tell you exactly the same thing, which is that the rise in the copper price has been part of the money game. And you see it in gold prices, silver prices, etc., etc.
Financialization, I think, is the ugly word that it's
Simon,
termed.
Simon,
Yes.
may I ask you a question at this point, because copper has financial aspects without a doubt. However, do you think this time is different in some way? Because the behavior of copper price has been quite extreme in the last month. So I'm wondering if we could consider that copper is now seen more similar to a precious metal. I'm not telling you that this copper is a precious metal. No. Yeah. No. I'm not talking about that. But investors seems to considering copper in a new dimension, and this is certainly increasing volatility. What do you think about that? What's historical experience you have?
Right. My answer is really quite simple. What is the foundation for all markets? Liquidity. So I'm now going to quote you a piece that came out yesterday from probably the world's best analyst of global liquidity, Michael Howell, who sent a piece out yesterday, and I'm repeating his opening paragraphs with his permission. The title of the article, "The Liquidity Tide is Turning, Warning for Risk Assets." Risk assets are sending a clear signal. It's the end of easy money. After a spectacular 3-year run, risk assets from Bitcoin to high-growth tech stocks are skidding. This isn't a coincidence. It's the direct result of a fundamental shift in the most powerful driver of financial markets' global liquidity. The U.S. Federal Reserve, under presumptive Chair Kevin Warsh, and egged on by Treasury Secretary Bessent, is now explicitly threatening to shrink its balance sheet process known as quantitative tightening. This hawkish pivot, potentially influenced by the philosophy of influential backers like star investor Stan Druckenmiller, make a decisive turn from the era of endless support. So my take is that, and it fits with a lot of the wave cycle theories that I follow. We are at the top of a cycle, and depends how much of a correction we get, but at the very minimum, we'll have a good correction.
Now,
Simon,
Juan Carlos, I think it's a good question, because I think something lying behind your question is this any different to the past, but it's just in a different shape or form. And there was a Greek philosopher. He was called the weeping philosopher, Heraclitus. He was around about 500 BC or something like that, and he basically believed that change is the fundamental essence of the universe. And there were other philosophers at that time who said, no, it's the other way round. Are we not just infatuated by change is always there? And what Simon is just saying, hey, we're on the cusp of another great change. But haven't we seen it all before in a different shape and form?
well, that's a question I have, and to be honest, I think I'm not sure if we have seen exactly the same, but what I'm pretty sure, and perhaps is close to what Simon described, is that we are in a transition to something different in many
Yes.
ways, and metals, precious metals, and perhaps copper. And that's my question.
Yes. Hard assets. We've talked
Hard
about that before.
assets are becoming more valuable
Mm.
because the uncertainty around geopolitics, monetary policies,
Mm.
and debt are too high simply.
Yes.
So when you are in a context like this, something has to change. And my impression is that precious metals and copper and other assets are following that situation. I agree with the Simon's let's say underlying analysis, but I think we need to go deeper on this topic.
I think you're absolutely right, Juan Carlos. What I was putting forward is just the short term.
Yes.
What is going to happen over the next 3-5 years? Two things. You're absolutely right. People don't want paper assets.
Yes.
Because why do they not want paper assets? Because of the real underlying phenomenon of inflation and the likelihood that the dollar is going to fall sharply over the next.
So that's a breakdown of
5
trust.
years.
I mean, that's basically saying, hey, to get us out of a problem, we'll just print more of it.
But that's what you've also got to take into account is what is the Achilles heel for the American economy? It's
Yeah.
the bond market.
Yes.
And why has Kevin Walsh, now the presumptive Chair Fed, he is more hawkish on throwing money at problems.
Yes.
And that aligns with Scott Bessent, the Treasury Secretary. If you can control the bond market, then you can control the economy. The risk is that the bond market is ripe for a real plummeting fall in assets and rise in yields. So what I think the game plan of Walsh and Scott Bessent is to make the pips squeak in the economy short term, so that when they go to Congress and say, look, it's now up to you to cut spending. We can't keep flooding the system with liquidity. As it is, if you look at the total debt of America last year, it was $136 trillion, which includes government, households, corporates, financials. And you look at America's GDP, it was $30.6 trillion. It takes $4.50 to get $1 of growth.
Is that very much different to a lot of other places?
It's a bit higher. It's a bit higher than the global figure, which is $4 per GDP growth.
Yeah, but there is a difference.
Yes,
but there is a difference, and the United States is the pillar of the global monetary policy.
it's a circular reference, isn't it?
Exactly.
It is circular, but the problem is, how much longer can you throw liquidity into the economy to get $1 of growth? I mean,
Simon,
I did some numbering based on the past history, which basically showed that by 2030, you're going to need $6 of debt to get $1 of growth. I mean,
yeah,
the
Simon,
system is going to break down.
Gravity. Juan Carlos, you making a point.
I'm curious on how the extent of these policies driven by the midterm election at the end of the year in the US. Sometimes I feel that the US policies are highly influenced by the need of winning this election, Simon. And what happened?
That's unusual for politicians, isn't it?
Yeah, but the consequences, the economic consequences, could be huge. So
Yeah. It's a question of timing. The elections are in November. Let's have the pain now, and then we can release some liquidity or do strange things to get the economy going before the elections.
I thought it could be the opposite, Simon, because if you want to win the election, you need the liquidity now, and then release the pain after the election when you are in power.
But it comes back to the Achilles heel, the bond market. The Treasury has to refinance $10 trillion over the coming 12 months. Whether you do it with rates at 4.5%, say 10-year treasuries, or you do it at 2%, it's a hell of a big difference.
Yeah, but do you think, guys, that the U.S. election could change the fundamental analysis that we are deploying here? I mean, if the weakening on the global monetary policies are going to continue or not, depending on the midterm
November is
elections?
Juan Carlos. November is a million years away on what we've
Exactly.
experienced in the last few months. I mean, you cannot go through a month without seeing some
Big
weird,
change.
rapid change. And
And let's not go into it. But you've got Ukraine, you've got Iran, you've got Taiwan.
Venezuela.
If any one
well,
of those goes the wrong
everywhere.
way, it's going to upset whatever
Yeah.
the
It's a good.
president
I think it's a good
wants.
point you raise, Juan Carlos, that and Simon, that a lot of this is kind of showmanship, is what you're sort of getting at, and to be able to see through the weeds of that is quite difficult. Look, I was reminded. I managed to. I bumped into a website today. It's 80 years ago since the Yalta Agreement. And now, how ironic is that? Three, leaders getting together in Crimea and sort of making agreements about how does Europe go after this. I'm not sure it's gone especially well in recent times, but and here's a point I would like to make, because we are in February and we're coming up for the 4th anniversary of what I think is quite an atrocious and possibly unnecessary conflict in Ukraine. And I have Ukrainian friends, I have Russian friends too. And I'd just like to make the point that whatever we say on this podcast does not hide the fact that there is a massive amount of human suffering going on in the world at the moment, especially in that particular part of the world. And my heart goes out to people who are genuinely suffering at this moment in time, 4 years on since the anniversary of that. I would call it an invasion. Simon might have a different view on that, but that I think it's important to recognize the human cost of conflict. And we are three honorable gentlemen musketeers, and we are good human beings. We're not robots yet. And pass a thought to people who are suffering in this world.
Yes, I
Andy,
agree. Sorry, Simon.
Andy,
No, I just want to.
let me add a point to that excellent remarks you made. In 2012, Ukraine's population was 46 million. Today, it is 34 million. 2 million have been killed, and 10 million have left the country.
That's a tragedy. That
Yeah.
is
a tragedy.
Yeah,
Yes.
of course, Andy, the point that you raised is quite sensible to all of us, and we feel very sorry about that. Let me give you the same numbers in Venezuela, Simon. After many years, the population of Venezuela decreased by more than 10 million people as well. So. And they are spread all around Latin America and other countries. So yes, we are living in a very, very tough world, and I'm wondering, going back to connecting this situation and these very big issues with our beloved metal.
Yeah.
Uh, we have seen new stockpiles.
Let's come back to that. That's a good point.
Yeah.
This is it's very important, because we are shifting out. We are shifting out of essentially a world of peace, where policies were built around peace,
to
preparation. Now we're shifting into a world where policies are being evolved around war contingencies, whether they be stockpiles.
Is that permanent and long lasting, or if suddenly the world finds peace, then we're going to end up with a much lower copper price?
Yeah. Well, when I ask, Sorry, when I
everything.
asked Simon about the midterm election, I thought that perhaps we should see some change in this trend. However, my view is that this tendency towards a new world order and a completely new framework is unstoppable. That's my opinion. I don't know
Yeah.
if you
Well,
agree, guys.
it's mine too, because essentially when you strip all the nuances out and look at things in a really pragmatic way, we have got the old American dominated Western world versus that's the old world versus the new world, which is BRICS dominated by Russia, China, and India.
Mm.
Mhm.
Well,
Yeah.
I'll sort of interject a little bit there because I've read a lot of your notes and they're very intelligently put together, Simon. But I just think we're in a more chaotic world than the one you portray. I think we're basically a collective bunch of buffoons on the planet, and I'm not. I don't think I really share your thing about how organized it is on these two poles. And I think my reference point to that is, and we had this conversation before about China. I deeply believe China is grossly misunderstood as someone who's lived and spent a lot of time there, and I just don't think people understand it well enough, and that is
You're,
Absolutely.
that is
you're dead
dangerous.
right. You're dead
And
right.
Absolutely. Sorry. Let me
yeah,
let me tell. This point is very important to me personally because I live in Chile, and my one of my main concerns is that uh, the most of the people in Chile uh, is not aware of what China means right now
yes,
to the world, and as Chile is a big mineral producer, this could be very, very important, in the next future. I just want to reinforce your point and give you
it's a good
the
point.
local point.
It's no different to Australia. I mean, Australia does a lot of trade with China, and um, the people who are involved in that business understand the nature of that business. But there's a lot of people in the street who don't, and it's easy to end up with polarized views, especially if it's led by politicians that force you into a different sense of judgment. I think so. The stockpiling thing is really a story of fear, isn't it?
Sure.
Well, first of
Well,
all, it's a confirmation that hard assets are much more important.
Yes.
Let's start with that.
and it's also confirmation that certainly the leadership in China sees a very fractious world ahead of them,
Yes.
and what they're building is to be self-sufficient if the American-led world decides to, for instance, shut down the key sea choke points.
Mm.
But
This is
I think
so
it's
they're
important,
building
Simon.
efficiencies.
I think it's important to explain to our listeners what happened around the stockpiles, because it's something that is not so very well known.
Yes.
So let's
That's a
start
good point.
explaining that.
What are we talking about in terms of tonnage and percentage of consumption? LME, Comex, Chafee stocks are not very high, are they? That's a proportion of consumption. Here we are talking about potentially big rises in less visible stocks.
Correct.
Has it actually happened? Simon, you're talking about surpluses. Where have the surpluses gone, if there are surpluses?
In the exchanges.
But
If you look
they're
at the
not
if
big
you
rises, are they?
600,000, I've forgotten the exact figure, but around 600,000 tons last year.
Out of a consumption base of
Yeah,
what,
20,
Yeah.
20,
25
20,
million?
20, 27, 28.
Yeah.
But a significant portion of that, Simon, is explained by the tariff threat in the United
Yeah,
States, and
sure.
and I'm wondering, guys, whether this stockpile in the in the exchange, sorry, uh, will change anytime
Yeah.
because some people says, okay, no, the US will introduce a tariff in refined copper, and the stockpile will disappear at that time. But I'm wondering if that will happen sometime in the future, or the US will find a way to retain that stockpile in the US territory for geopolitical reasons. So,
But
Where's it?
uh,
And
I,
where's it held and what form? And yeah, I mean and who
I
sells it to that stockpile?
think you're dead right. I think the first focus of America is to stockpile the critical minerals.
mhm.
I think copper comes later, whether it's later this year or next year or the year after. I've no idea.
Mm,
But what you've also got on the other side of the world, you've got China announcing that we are going to increase our stockpile of copper cathodes.
mm,
Now, there are rumors in China that the government will shut down between 1 and 2 million tons of uneconomic smelt capacity.
mm.
And so that the concentrates that would have gone into those smelters will go into the stockpile.
There's a
Then
lot of new smelting capacity there as well. Yeah.
how much of that will come through, I've no idea yet.
Mm,
But I think when you have to look at where will China get those concentrates, if you look at the neighboring countries, including Russia and Kazakhstan, Uzbekistan, etc.,
it's not enough.
etc.
No.
Hold on a moment. Their mine production by 2030 is scheduled to increase by 1.6 million tons.
Out of where?
Out of those countries
Yeah.
that I've just mentioned.
Okay. So Russia,
Now,
Tibet.
what my guess is that China will offer terms and prices for concentrates from those countries that makes it more profitable for them to export concentrates than to refine those concentrates.
Yeah, of course. Yeah. Yes. Yeah.
So that's just me trying to see where will they get them. And there's one idea.
So
Yeah, Simon, but
Chilean perspective on that, Juan Carlos. Chile has a quite a special relationship with China and in Asia in general. It's a big supplier of copper concentrates and cathodes, certainly. How has this world change affected thinking about the copper industry in Chile?
a very, very complicated question, Andy, but I think it's very important to clarify that Chile has a very special situation because Chile trades most of the copper production to China, but we don't have any investment from China. That's a different case of Peru or Ecuador, for example.
Mm,
So the first question in my mind is how this special situation will evolve in the future, because I'm pretty sure that the Chinese companies will try to increase their
First.
equity control in mines, and Chile is probably a very intriguing case.
yes.
And under the new security policy from the U.S., these decisions will be very hard in the future.
Yeah.
Yeah. Yeah.
So uh, that's why I reinforce your point, Andy. On the lack of understanding of what China means to the global economy now.
Yes.
So my impression is that particularly the new political cycle that's starting in Chile will probably be aligned to the U.S. However, the copper market is probably having more frictions between the
Yeah.
U.S. and China in the future. So that's something that I have no an answer.
Well, so can I pose a question?
Of course.
Will the copper industry have more friction with America? Because the copper industry's future depends upon its sales to China.
Exactly.
I would say absolutely it's going to have, well, America is not a big outlet for copper demand, is it?
I can go
Not
back
directly,
to
anyway.
two ITC cases,
Yes.
78, 1984, in which I acted for the American copper industry. And there was a huge friction between Chile and America over copper in those days. So is that going to
Yes.
come back again?
Oh,
Wow.
that's a different story altogether.
Yeah,
Oh,
but
yes, different, but it's got the same connotations.
yes. It's very hard to answer, Simon, but um, I think the pressure will come.
Yeah,
We have lived in some sort of ideal world because everything we produce has a market in China and other countries. But now we will have the geopolitical pressure again. I don't know exactly how this pressure will be visible. However, the pressure will come, and my concern is that we are not prepared to deal with that new scenario.
my idea to you, Juan Carlos,
Yes,
you should
please.
prepare a report for Codelco and the copper industry.
Oh God. Okay, thank you for your advice.
Well,
But
look, let's. I think we're pretty close to sort of trying to summarize things. And I was going to sort of wrap it up in the contrite sort of thing of so what to expect in the first half of this year, which is really pretty incredible. I mean, yeah, what's your thoughts over, let's say, one quarter? Never mind the first half of the year. Where do you think we're heading from now with copper?
wow, one quarter
Downwards.
looks very, very far away.
Yes, it does, doesn't it?
I come back to my liquidity question. So I think that probably over the next 3 to 6 months, we're going to see some quite sharp falls in copper and other base metal prices, corrections in silver and gold, and then later in the year, we get the recoveries.
Hmm.
Yeah.
I'm not
Well,
so.
I think
I'm not so sure. I hear you, and it's perfectly logical as always. But nothing would surprise me. We are at $13,000 within a whisker, and I wouldn't be surprised to see 15K in Q1.
We've got 15, 16 in 2027.
Yeah. Well, that's
The
a long way ahead. That's a long way ahead, my friend.
the problem is when you convert it back into $25 or $26, it's a completely different price.
Yeah. Well, then that comes back to our US dollar sort of story, doesn't it?
Yeah.
Look, I think we're now on the sort of cusp of wrapping this thing up. A couple of things I'd like to add. We are, other than my earlier comments on the pain of conflict, we are on the cusp of another Chinese New Year. And I found this quite amusing that we are moving into the year of the horse fairly soon, I think within the next week or two.
17th February.
There you go. And I always celebrate Chinese New Year. That is one of the things that I love doing after living there for so long. And what I found amusing about that was that there's a series of films called Harry Potter. And for this year, for some strange reason, China seems to have adopted a bad sort of part of the Harry Potter things called Draco Malfoy, because his surname translates into Ma-Fu, which is vaguely sounding like horse. So he's become the iconic symbol of the Year of the Horse, an English actor from some years ago. I just think that's an interesting paradox, coming back to what we were saying, Juan Carlos, about how we don't understand China from outside China enough.
Yeah.
Look, gentlemen,
You know
Well,
what the year of in the China's horoscope, what the year of the horse means? Bad
I don't.
times. Bad times.
Bad times. Well, you're the pessimist. I'm the optimist.
I'm
I-
merely saying that's the horoscope for the horse.
yes. Don't bet.
But is
Yeah,
is a
don't bet
metal
on
horse
horses.
good horse, or what material is horse made?
Well, it's usually made of bronze, isn't it? So it's got a bit of copper in there. Aye.
That's a good one.
Yeah. Look,
Good.
I think we can now call this a wrap. And thank you for joining us on the World Copper Podcast. If you want to find out more, then check us out on www.theworldcopper.com. In the meantime, in this volatile world, safe travels, and we'll see you again.